And here's the coup de grace by von Mises, Ludwig von Mises. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The crack-up boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not. Thursday, September 19th, 2024, Maneco 64, home of alternative economics and contrarian views. So the Fed surprised almost everyone. I think JP Morgan called for a 50 basis point cut. But more importantly, what does the Fed know that we don't? Well, I think the Fed knows that the economy is decelerating very quickly, and it's very close to going into a recession, and they're desperate. But we're not going to talk about that today because I don't think it's relevant for each individual. What we're going to talk about today is that I think the Fed's panic and action yesterday is the trigger for the crack-up boom, or if you want to call it, for currency collapse or hyperinflation. And it's very different from inflation, and that's what we're going to look at today. And when I talk about currency collapse, I'm not just talking about the dollar index dropping. I'm talking about all currencies collapsing versus real goods or real assets, hard assets. And I'm going to refer to Human Action by Ludwig von Mises. And I'm sure if you ask around the Federal Reserve, not just the FOMC and the governors there, but all the economists, I would say maybe one person at the Fed has read Human Action and knows what the consequence could be of what the Fed is doing. And I just want to tell you right off the bat, the market was very topsy-turvy last night, or London time, or afternoon New York time. Everything went up and then it turned around and finished down on the day. Very confusing. But I think that's an anomaly, and we're going to look at where the markets are today. And yes, there are many who still think we could see a crash in the stock market. We could see deflation. But in my opinion, I'm going to take a stand here. I don't think the Fed is going to allow anything bad to happen. And I think this 50 basis point cut is just a beginning. Don't forget, they have a lot of tools in their toolkit. And why did I do that? Well, because the only tool they have really is money printing and QE as well. I'm sure they're going to have to stop the QT because they can't tighten through QT and cut rates. But I'm going to also recommend you right now, before I start, this book here, Fiat Money Inflation in France, How It Came, What It Brought, and How It Ended by Andrew Dixon White. He was a diplomat in the 19th century. He was one of the founders of Cornell University. And it's a great little book. And it's one of the books that's given me, over the last 20 plus years, the insight into what's going to happen. And it's not going to end. The only end for the current system is collapse. And I think it's coming through a currency collapse event. I'm not sure the Fed and politicians are ready to save the dollar, because that means tightening their belts, creating a massive depression. They'd rather inflate, but there's a problem with inflating, as we're going to see in a minute. And even if they were to get religion in terms of sound money and try to save whatever's left, the last 1% of value of the fiat dollar, you could bet, it would be a total annihilation of the monetary system as well. Loans would all be liquidated. There'd be massive bankruptcies, the government included, and the only money left would be gold and silver. So either way, I'm going to hold on to my gold and silver. Gold made an all-time high yesterday afternoon at just at 2,600, and then it turned around with everything else as well. But I'm not concerned at all, because you need to look at the bigger picture. And talking about gold, yes, and if you haven't bought gold yet, or silver, or if you have and you're thinking about adding on to it, you can help the channel by using my affiliates in the US. I'm affiliated with Mouse Franklin. They always have specials every week. You can check how to get in touch with them below in the description. Make sure you mention Maneko64 or Mario if you get in touch with them. And in the UK, of course, I'm affiliated with Gold Investments. All the details are in the description as well. And I have an affiliation still with Glint. That's a different way of owning gold. They've cleaned up their act in terms of their accounting, I was told. So if you're interested in having gold stored for you in Switzerland and having access to that gold through a MasterCard, or having an app where you can see how much gold you have, Glint might be for you. So anyway, I remember back in 2021, I think, Jay Powell, the chairman of the Federal Reserve, was in Congress, and someone asked him about all the QE, the fact that rates had been cut to zero, whether that wouldn't create inflation. And he said no, money printing or money supply going up does not create inflation. It's all about expectations. And of course, he was completely wrong, because we saw prices go into double digits, really, if they measured CPI properly. But they've tinkered with it so much that I think prices only rose to 9%. And don't forget, the CPI really is not inflation. The CPI is a measure of prices, and they can always doctor it. What you need to look at is the growth of M1 and M2, as you can see from these charts. Yes, they have slowed down, but they have not gone back to the levels of pre-2020. And that's how they fool people. They don't focus on M1, M2. They focus on CPI, the number you get every month, or year-on-year number, like 0.1. Whoa, inflation, I think Biden said once, inflation's gone down because it month-on-month CPI went down 0.1 or something. But look at the chart of the CPI as well, going back decades. There's only one way that CPI, the index itself, goes, and that's higher. And more importantly, inflation is everything about the currency. It's the inflation of the currency. That's how it was known in the old days. In Rome, they inflated the currency by adding base metals to the silver denarius. So they kept the same face value of the coin, but people twigged on that there's not as much silver. So how do they adjust to that? Well, they raised the prices of the goods and services. And it's been happening since time immemorial, right? Civilized time immemorial, since we've had currency and money. And that's what it's all about. And that's why it's so important to look at the price of gold. Because up until 1971, gold had been money and was the major measure of value. Money was a weight of gold, but what we're seeing is the value of the currency continue to go down. I would add that the real rate of debasement of the currency has been about 10% per annum since the year 2000. As you can see here from in Gold We Trust, Incrementum AG, they've kept track of this. Of course, you're not going to hear about what I'm telling you on CNBC or Bloomberg or Fox Business or the FT. To them, gold is just a barbarous relic, a pet rock. I mean, 20 years ago, the FT said it was pointless to hold gold, of course, going gold. Gold was at $400. Right now, we're approaching $2,600. I'm glad I didn't listen to the FT, but I knew this was misinformation. So that was my first encounter with fake news about 20 years ago. But let's go to von Mises. You must be waiting to see why I see a crack up boom or hyperinflation or currency collapse. So we're gonna start on page 427 here. And it's the part about the anticipation of expected changes in purchasing power. So von Mises says, the first stage of the inflationary process may last for many years. While it lasts, the prices of many goods and services are not yet adjusted to the altered money relation. There are still people, and that's what's really important, in the country or in the world in this case, because the economy nowadays is so international, isn't it? Who have not yet become aware of the fact that they are confronted with a price revolution, which will finally result in a considerable rise of all prices. Although the extent of this rise will not be the same in the various commodities and services, these people still believe that prices one day will drop. I think we're very close to the point where people are not going to believe that anymore, and this is very serious. Waiting for this day, they restrict their purchases and concomitantly increase their cash holdings. As long as such ideas are still held by public opinion, it is not yet too late for the government to abandon its inflationary policy. So there you go. They're going to keep inflating until they can, until people wake up. And here's the coup de grace by von Mises, Ludwig von Mises. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The crack-up boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper. Nobody wants to give away anything against them. It was this that happened with the continental currency in America in 1781, with the French mandats territoriaux in 1796, and with the German mark in 1923. It will happen again whenever the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So there you go. The reason this book is really important as well for me is that it shows that once you start down the path of inflation, you cannot stop it. And every time you inflate, like the Fed is going to do now, you have to do it and give it an even bigger dose than you have before. If you look at what they've been doing since the dot-com bubble burst, it's been bigger and bigger doses, more and more QE, sharper rate cuts. It's going to get crazy, in my opinion. And aside from gold and silver, I think real assets, commodities, they're going to go through the roof because they're real things. What about the general stock market, in my opinion? Well, companies that deal in real goods, that produce real things, I think they'll be okay, even though their prices might fluctuate a lot. But when a currency collapses, you want anything but the currency, but you need to be careful as well what kind of securities you hold. If it's related to things like insurance and I would say banking, you could be in trouble. But I'm not here to advise you how to invest. I'm here to try to warn you against currency collapse. And you need to do your own research and homework. And yes, maybe Clive and I will talk about this tomorrow. Clive Thompson, he's a retired fund manager, and we can give you some ideas of what we think and what could happen to different asset classes. But the real insurance will be in having hard assets, and in particular gold and silver, in my opinion. So there you go. Yes, I was following the market reaction to the Fed decision and also maybe to the press conference. I didn't listen to Jay Powell. And yeah, the stock markets went up. The dollar went down. Gold touched 2,600. Silver went up above 3,100. But then all of a sudden everything turned. And the Dow finished down 100 points. S&P finished down 16. And the NASDAQ finished down 54. So I can understand why people late yesterday in the US were thinking, wow, this didn't work. We're going to crash. But some people think that the initial reaction to statistics or announcement by central banks is the right reaction. And I think in this case it was. And what was that? Well, everything went up and the dollar went down against everything, right? I know it turned later on, but right now, as I speak to you here, and it's 8:30 a.m. London time or 3:30 a.m. Eastern time, we've got gold back up $20 at $25.79, right near the highs. Yes, it's below the 2,600, but the stock market as well is below the highs from yesterday. But for example, the Dow now is up 287 points. Silver, silver went up above 31 yesterday and dropped below 30, but now we're up at 31.15. And so is the NASDAQ. NASDAQ is up 1.6% now, and the S&P is up 1.1%. And the dollar is pretty much stable. So it did go back up yesterday. But as I said, I wouldn't worry too much about the dollar versus the fiat currencies, because what happens in a fiat currency system is when central banks start loosening policy, and especially the major central bank being the Fed, you can bet the other central banks will follow, because they don't want to fall behind, because it's going to hurt their economies if they keep their currency too strong. Am I saying this is the right thing to do? No, but that's the way central bankers think. And case in point will be today. The Bank of England is not expected to cut rates. They cut rates once this year from 5.25 to 5. But I wouldn't be surprised if they cut today because the Fed cut more than expected. So it gives them a bit of a leeway and they don't want the pound strengthening too much. We'll have to see. Their decision is out at 5 a.m. Eastern Time or midday London. And with that, I'm going to, call it a day and wish you all a very good day. And yes, take care. Bye.